What's going on, ladies and gentlemen? This is Danny from Markets Protocol. In this video, we're going to talk about a most concerning topic here, which is about Wick fails and Wick rejections. So these are two different concepts. So in this video, I'm going to break it down, the differences between the two. Okay, so first off, let's start with our Wick fails. Okay, now before we get into this video was requested from one of the people from YouTube. I forgot the name. I remember it might have been Simon requesting this video. This video and the topic was also the second rated poll we did on YouTube on Friday. So once again, this video is definitely a topic of interest for our viewers and our traders that come regularly to our live streams. So this is for you guys. Okay. So without further ado, let's get started over here on the topic of Wick fails first, and then we will talk about the Wick rejections. So the things to remember about Wick fail, I have written down over here. So Wicks get filled at times of high volume in the market. Okay, for example, when you are trading in New York session, could be pre-market New York, could be NY open session, could also be going into New York Stock Exchange open. So this is a time where price is moving with a lot of momentum. There's high volume in the market, and whenever price is leaving a wick to the upside or downside, depending on the trend, you can expect that wick to be filled. Okay, so that's the simple idea behind Wick fills. Okay, now it could be trading New York session, it could also be trading in London session. Both sessions have high volume. Okay, 99% of the time you will see good volume in these sessions. If London session does not have any good volume, then going into New York session you will see good volume. Okay, so that's one idea. Number two, the probability for a Wick fill is higher when a candle closes either above or a below range of the previous candle. Okay, now this is a key concept which I want to show you guys over here. Okay, so let's bring this description on the left hand side and draw some examples. So what does it mean when a candle closes above or below the range of the previous? You might have seen me say that on the live streams multiple times because this is a key concept. Okay, so for example, let's just say we have a bullish trending market. Okay, so what do you see in a bullish trending market is price makes higher highs and higher lows. Okay, so drawing some candles there just to clear up the concept. Okay, so if you closely look at the candles, this indicate momentum. Okay, big body candles does have a wick on top, does have a wick in the bottom, but the body tends to be stronger, bigger in size than the top wick and the bottom wick here. Okay, typical example of high volume and momentum candles. Okay, also if you notice what candles do normally that time is we break the high of the previous and we close above that top wick. Okay, so when I talk about candles closing above the range of the previous candle, so in a bullish trend, ladies and gentlemen, price will be trending towards the upside. So when a candle, something like this, closes above the range, this wick on top on the previous candle is a candlestick's range. We have a candlestick range here, we have a candlestick range here. Okay, so when this candle decided to close above the range of the previous candle, the probability for this candle, which is the next candle, is higher to continue towards the upside as long as the low of the previous one is not broken. Okay, so this is a key setup. Okay, whenever you see price trending towards the upside, higher time frame, lower time frame trend, both are moving in the same direction towards the upside. You see candles closing above the range of the previous, giving probability for the next candle to also continue towards the upside with a lot of volume. Okay, that's the simple setup. Okay, now also I want to mention, what if the candles do have higher highs and higher lows indicating bullish momentum, but a candle fails to close above the range of the previous candle? What would you do in that situation? So something like this. You have a bottom wick, which is technically higher than the previous, but the body does not close above the range of the previous. So what can you expect over here? The probability to fill the wick in these situations is going to be definitely lower than the previous example, okay? Because this candle closed bullish, weak body, not a strong body close here, does have a higher high, higher low compared to the previous candle. We are still moving in an uptrend, but the body of the candle did not close above the range over here of the previous candle. So if you're expecting a wick fill on the next candle, you could take it. The probability for a wick fill could be lower depending on what's happening on the left hand side. If the range is clean, if the volume is definitely higher, you could expect a wick fill. Even if you're expecting a Vic fill in that situation, you need to keep in parameters your risk, which is you need to use a stop loss. In that case, stop loss you will be used on the previous candle, expecting the next candle to fill the wick. And once it decides to break the high of the previous, which is breaking the range of the previous candle, we can expect price to further continue towards the upside. But just remember, in these cases, the probability is anywhere from 70 to a 80% probability for price to continue bullish. Just remember that, okay? If you're not gonna remember by watching this video, I would suggest grab a pen and a paper, write down these examples, try to draw it yourself. So once you see it, once you hear it, and you actually write it down and draw it yourself, you will have a better memory whenever this happens in the future. Because if you just listen and watch the video, you may end up forgetting it the next time it actually happens when you are trading. So just a recommendation for you all over here. Okay, so this example, you can expect probability to be lower, definitely, when a candle is not closing above the range of the previous candle. But when you do see candles closing above the range of the previous candles, the probability for price to continue bullish is higher. Just remember that, okay? So this is what I mean by number 2 example right here. Probability for a wick fill is higher when a candle is closing above the range of the previous candle in a bullish trend. Vice versa, candle closes below the range of the previous candle in a bearish trend. Okay, so once again, the probability here, you have higher probability. Okay, 80% to let's say 95% probability here for this candle to continue bullish as long as you have clean range on the left. Make sure the candles are clean on the left previously, so price can flow there clean as well. If there's a consolidation on the left hand side, the probability for a wick fill there is slightly less as well. So make sure you check your ranges before you take trades. Also, the probability for this setup is higher, 80% to 95%, simply because we have closed above the range of the previous candle. Okay, now if you want me to do the bearish candle example, I'll draw it for you real quick, okay, just for visual purposes, how it looks like. Okay, so we're still talking about the second point over here, the probability of a wick fill when a candle closes above or below the range of the previous candle. So let's say in a bearish trend, what does price do? Price makes lower highs and lower lows. Okay, this is a typical example of a bearish trend. This is something you should see. Okay, so bearish candles coming down, have a wick on top, wick in the bottom, right? Next candle breaks the low of the previous, so we can expect price to continue bearish. Okay, so a good example of how price trends with momentum at a time where there's good volume in the market. Big bodies, small wicks, big bodies, small wicks, big bodies, small wicks. Okay, high volume time, momentum candles indicating volume in the market, because wicks are getting filled whenever there is high volume in the market. If you're expecting wicks to be filled in Sydney session, Asian session, or somewhere at midnight, you're not going to see that. Okay, you're not going to see that, because whenever there is no volume in the market or very low volume in the market, price might not just fill the wick. Just remember that. These are the basics, the core basics of wick fills. Okay, now once again, if you notice the low of the previous candle, this candle, bearish candle, has a range at the bottom. Okay, now we are not concerned about the range on the top because we're trending bearish. Price will not break the high of the previous to continue going bearish, of course. So what happened here is this candle broke the low of the previous candle right over here, went down to create a new lower low, ended up deciding to close below the range of the previous candle. Okay, we can clearly see that. You will see a closure below the range of the previous candle. Whenever you have closure below the range of the previous candle, the probability for the next candle, which is right here, to continue going bearish is what? If you remember, 80 to 95% probability to fill the wick in the bottom and continue going bearish too. Okay, so let's just say, since we're talking about wick fills here, okay, let's say we had a slightly longer wick here. We still decided to close below the range of the previous candle. Once again, ranges are the wicks on candles. The bottom wick is a range on that candle. We closed below the range of that candle. This candle, let's just say, hypothetically speaking, left a wick to fill towards the downside. And once again, hypothetically speaking, the range on this candle to the downside is 39 pips, hypothetically speaking. Okay, now in order for the next candle to fill this wick, what it has to do, it has to obviously respect the high of the previous candle, because we are trending down. Whenever price is trending down with momentum, it should not break the high of the previous, because if it does break the high of the previous, that candle will not continue going bearish. At least not that candle will continue going bearish, so there's no point staying in that trade. Okay, so what you will do, you will designate your stop loss right over there, the stop loss on the previous candle high in a bearish trend, expecting the next candle right over here to fill the range of the previous candle, which is a wick fill right here. And once again, we saw, pretty much hypothetically speaking, the range on that candle was to be over 30 pips, close to 40 pip range. So if you're expecting that wick fill, you could trade it. Stop loss, you will keep it on the previous candle, expecting price to move down. Okay, probability for the setup once again is 80% to 95%, because a confirmation on a wick fill is this candle right here, closed below the range of the previous candle. Okay, now once again, talking about the other probability, let's just say price did break the low of the previous, but decided not to close below the range of the previous candle. What would you do in that situation? So let's say this candle has a wick right here. Let's grab the red color, make it extend a little bit lower right here. Okay, next candle has a top wick. Okay, breaks the low of the previous, ends up closing weak bearish, but there's a wick to fill right at the bottom. Now, if you look at closures like this in the market, what do you see? This is a range on the previous candle. Did this candle right here close below the range of the previous candle? It did not close below the range. It closed bearish, but it did not close below the range of the previous. So what is the probability now? If you remember, the probability over here is going to be lower. Ladies and gentlemen, looking at 70% to 80% probability. Depending on the volume in the market, next candle could fill the wick, but it's risky, okay? And if you wish to take that trade, same risk parameters, you will keep the stop loss on the previous candle, expecting the next candle to not break the high of the previous, okay? Make a lower high, fill this wick, okay? Fill this wick, and that's going to be your trade. When candle fills the wick, 80%, 90%, or let's say almost 100%, you close that trade, okay? Right over here. You close that trade. If you don't want to close, you can close partials. Let's say, 80% of your positions are closed at that time. So these are hypothetical examples that you will definitely see happening in the market. So make sure, ladies and gentlemen, you're taking notes or drawing these examples to visualize and remember this whenever this happens in the future. And last point I want to mention here, I would say second last point I want to mention here is Wick fill can be traded on any time frames. Remember that. You could be trading a Wick fill on, let's say, a 5-minute time frame, 15-minute time frame, 30-minute time frame. Or if you do not trade as scalping, if you don't scalp trade, you are more of a long-term trader. Let's say you swing trade, you hold your positions for a few hours or half a day. That's swing trading. So you might be focusing on the 1-hour time frame, or maybe 4-hour time frame, or even the daily time frame, right? So it all depends on what type of trading you do. Either short-term scalp trade, or you do long-term. swing trade. So the whole point is Vic fills can be traded on any time frame, literally any time frame, as long as you follow the technicals and validate the entries, making sure everything matches up before you take that trade, and also keep in check your risk parameters at all time, using a stop loss and managing your risk when the candle is not going in the direction you are anticipating it to go. Okay, so remember that. And last but not least, ladies and gentlemen, I'm going to draw an example over here. This is a very common setup that appears 90% of the time on gold, different pairs as well. Let's say 30-minute time frame, you are looking at a VIC fill, or you're looking forward to trade a VIC fill, but when you switch to a lower time frame, like a 5-minute time frame, it looks like a break and retest. Okay, this happens most of the time. So let's draw a bullish example here. So bullish trending market once again. I love drawing bullish examples. Okay, all right. So bullish trending market. So let's say there was a resistance previously right here, which price decided to break above and close above. Next candle, right, breaks the high of the previous. Okay, first it forms a bottom wick, breaks the high of the previous, creates a new high, comes down, okay, something like this, maybe close above the range of the previous candle or maybe not, right, but has a wick on top. Okay, now for price, or for the next 30-minute candle, because we're looking at 30-minute time frame, hypothetically speaking, so let's mark a 30-minute time frame. Okay, let's plug it up. Come on, let me just point it right here. Actually, let's put it right on top. This is 30-minute time frame. Perfect. Okay, so currently we're looking at 30-minute time frame, hypothetically speaking. Okay, there is a resistance which candle decided to close above. As a result of that breakout, next candle forms a bottom wick, breaks the high of the previous, continues going bullish. If you traded that, perfect. If you missed that out, that's okay too. What can you expect is the next 30-minute to respect the low of the previous. That means it should not break it. Okay, once it forms a higher low and you are expecting the 30-minute candle to fill the wick, and hypothetically speaking, let's say the range for the wick to be filled is going to be, let's just say, you know, it's hiding the numbers there, so let's take it to the left. There you go. Perfect. Wick to fill, let's say it's 38 pips. 38 pips, you might want to secure 12 pips, 15 pips, you know, maybe half that, right, and leave the rest of it running, but that's a different topic right now. Let's say hypothetically speaking 38 pips is the Wick fill on 30-minute time frame. Now if you want to enter using the lower time frames like 5-minute time frame, you might not see a Wick fill there. What you will see is price has trended up, created a high, you are waiting for a support to be formed for price to continue bullish and retest that high. Now on 30-minute time frame, what you will see, there is a wick to fill. Okay, so I'm going to draw that example for you too, so you can visualize. Okay, so that was the 30-minute time frame. Just remember that, the example we drew here. Okay, next thing we're doing, we're switching to 5-minute time frame to see what's happening on a 5-minute time frame. Okay, so once again, we have that hypothetical resistance. Okay, on 5-minute time frame too, let's say we have a breakout, price closed above it, next candle, you know, breaks the high of the previous, we continue going bullish, ladies and gentlemen. Perfect. Okay, then what do you see is a little bit of a retracement. Okay, price coming back down. Okay, so this is happening on a 5-minute time frame. Okay, what's happening on a 30-minute time frame is a candle has pretty much closed above resistance. So let me just, what can I do here? I can just bring it to the left hand side. Perfect. So let's bring it to the left so we have more room to compare two time frames. Okay, perfect. Now let's put 30 minutes side by side so you can understand it perfectly. 30-minute time frame. Awesome. Highlight it right here. So what was happening in the 30-minute time frame, ladies and gentlemen? Once again, we had a same resistance. Okay, we had candle closing above resistance, remember, breakout, As a result, next candle forms a bottom wick, breaks the high of the previous, continues towards the upside. At the time of its closure, comes back down, closes something like this, leaves a wick on top. Now, if you're expecting the next 30 minutes to fill this wick, okay, something like this, respecting the low of the previous and fills the wick to the top, what would you want to see happening on a 5-minute picture? What do you want to see, my friend, is you want to wait for a candle, ladies and gentlemen, to close bullish at support first. Okay, so what do you want to see is a support forming here. Okay, now we don't want lows to be broken. So let's say this candle has a higher low, breaks the high of the previous, closes bullish. Okay, so we have support forming on a 5-minute time frame. Okay, what's happening on 30-minute time frame? We have a bottom wick formed, not breaking the low of the previous candle here. Okay, not breaking the low of the previous candle here. Okay, and you're expecting a retest of the previous highs right here. Okay, now for price to retest the high over here, you're expecting a move up to the new highs, which is pretty much the high right here. This candle needs to approach that by filling the wick right here. Okay, so when you see a candle closing bullish on a 5-minute time frame, creating support at the same area where price broke out of previously, the probability for the next candle to go bullish and retest the high is higher. Okay, and on 30-minute time frame, you will see a wick fill. So whenever you see a wick fill on 30-minute time frame or 15-minute time frame, 1 hour time frame, you can always toggle with the lower time frames. So let's say this is 30-minute, you switch to 5-minute time frame to see what's happening there. If you're looking at a wick fill on the 1 hour time frame, you might want to switch it down to the 15-minute time frame and try to see if you have a structure there which could be traded. Okay, so always interchange between these two time frames, or different, I would say, between different time frames overall, 5-minute, 15-minute, 30-minute, just to see how the structure is forming, and maybe you can just get a better price to enter. Okay, so this is one of the examples I wanted to, discuss over here. Perfect. So we did that. Now let's go back over here. So we talked about Wick fills here. Wick rejections, we will also talk about it, but before we go into Wick rejections, I want to take you to an example on the real market environment here. We just talked about hypothetical examples, but hypothetical examples are good, but it's good to look at the previous market data here too. Okay, so there's two potential examples I have highlighted here for Wick fills. This is on 5-minute time frame on gold. Okay, now the first example I marked up here is a Wick fill taking place in pre-market New York at 6:25 a.m. Eastern. So pre-market New York, do we have good volume during that time? Majority of the time, yes. Perfect. So what do you see here? Let's remove this first, and then we'll talk about a Wick fill. What do you see? Over here, what you see is price making higher highs, right? Higher lows. Perfect. So typical example of an uptrend. Okay. What happened here is we formed a lower high than the previous. Okay. So the probability for price to break the previous low is higher. Simple example. Whenever price makes a lower high in an uptrend, very likely it could break the previous low to continue a different trend. Okay, so for that, what we have to see is look for closures. This is a support on a 5-minute time frame. If you look left, we have this support, and price has decided to basically close below this support, as you can see. This is 1763 price level on gold historically. Once we close below support, right over here, you see the next candle breaking the low of the previous and goes towards the downside. Okay, goes towards the downside, forms a lower low. Okay, now since we have what, a closure below the support, we have that candle right there. Let me just clear up the screen so you can see the wicks as well. Moving that. Perfect. Let's zoom in a little bit more. Right here, closure below support, on this big momentum candle, closing below support. Next candle, breaking the low of the previous, significantly dropping towards the downside. Okay, but at the time of that 5-minute closure, we actually closed below the range of the previous candle. Perfect. Now, if you are expecting price to fill this wick, since we have a closure below support, this is a breakout, what does price has to do? It needs to respect the high of the previous candle in order to fill the wick. That's the simple and plain idea. Okay, so if you look at the highs, ladies and gentlemen, that candle came very close to breaking that high, but in a bearish trend, remember, it will not break the high of the previous. Looking left, it did not break the high of the previous. It basically filled the wick here, most of it. Okay, so that was a typical example of a Vic fill happening at a time where there's good volume in the market. Now that candle that filled the wick halfway, so this wick fill in total is close to 13 pips on a 5-minute time frame, pre-market New York. First candle fills the wick about, let's just say, 7 pips. Next candle forms a lower high, breaks the low of the previous, fills the wick completely. Perfect. And if you see a closure below the range or a wick fill right here, you see that candle closing below it. Next candle should not break the high of the previous. Instead, break the low and further continue towards the downside. So the trend continues. Okay, so that was a typical example happening at a time where there's good volume in the market. The second example for a Vic fill, I also have it right here in New York session. So let's take a look at that. Let's zoom out a little bit over here, bring it to the right hand side. Where was that? Oh no, I ended up erasing it, but we can bring it back. That's no big deal, right? Okay. Let's see if you have it now. Perfect. This is it. This is where it is. Big fill. Let's remove the previous example and go on to the next example on historical data on gold, which is a Vic fill in New York Stock Exchange session at 10:20 a.m. Eastern Standard Time. Okay. Okay. So in this setup, we have a trend which is going bearish here. Okay. So bearish trend, price is making lower highs and lower lows, breaking previous supports. Okay. Break and retest right here for price to continue going bearish. Okay. Now this happened, I believe, on Friday. We also traded on that too on Friday. Okay. So in this setup, what we saw on Friday was a false breakout. Okay, this is a support on a 5-minute time frame. We closed below support. Next candle broke the low of the previous, went towards the downside. That was the trade taken. Okay, now if you see price coming back to this area, forming a resistance to continue going down. Okay, now as long as we do not close back inside this range, okay, we are good to go towards the downside. But what happened is we closed back inside the range. So this is a failed break and retest, also known as a false breakout. So this is the first confirmation, okay? False breakout towards the downside, okay? So let's remove this. Let's remove the circle here. Perfect, okay? Now what's happening here? We have support previously, now acting as resistance. We have a closure above resistance. Okay, so making this a false breakout on the bottom. Okay, as a result of that false breakout, next candle broke the high of the previous, continued towards the upside till where? The previous rejection area, right over here. If you see, price has tapped into it and rejected. Now, depending on the closure of the candle, you could see the next candle to continue going bullish too, right? Simple idea. What that candle did, it tapped into that previous resistance turning into support, retested it, formed a new high over here as well, and decided to close bullish. Now, since that candle also decided to close bullish, if you're expecting the next candle to fill that wick, that Vic fill is going to be 10 pips, believe it or not. If you're expecting a Vic fill, then the next candle should respect the low of the previous, which will be the designated area for your stop losses. Okay. Now, the question for this Wick fill is how good is the probability here? I'm pretty sure you guys can tell. Since we have a closure above the range of the previous candle, you can expect price to further continue going bullish too. Where's that thing? Come on, man. There it is. Perfect. Let's highlight this, bring it right here. Okay, we have a closure above the range of the previous candle. So let's show you where that is. This is the candle that broke above, closed above, indicated a false breakout. The candle that we're expecting a wick fill has also closed above the range of the previous candle. So probability here is what? 80% to a 95% probability for price for the next candle technically to fill the wick. As you can see, the next candle right here formed a bottom wick, which is a higher low, did not break the low of the previous candle where your stop loss is, and expect a wick fill. That candle filled the wick. Okay, now that wick fill, once again, looking at it exactly, that's 10 pips. So depending on your entries, you might get less, you might get more. Okay, so this is a good example of a higher probability trade because we have a closure above the range of the previous candle, expecting a wick fill. Since we have a false breakout towards the downside, price could not maintain its move bearish, instead closing back inside the range. Which range it closed back inside? Right above the previous support right here. This is previous support, so this is a range right here. Closing back inside the range, candle retesting, closing bullish, and this candle filling the wick. So this was an example for what? Wick fills, ladies and gentlemen. Now, Wick rejections. Interesting topic as well. So we're going to talk about Wick rejections. So let's go towards a Wick rejection topic. All right. So now we can talk about Wick rejections. So some points you guys need to remember. You might want to write it down over here. So number one, when price reaches a strong support or resistance, it will tend to reject at the same historical level. Okay, so leaving in that case rejection wicks. Okay, so what that will look in terms of market structure, it will look like something like this. So let's say you are looking at a 1 hour time frame. Okay, what do you see is a resistance previously where price came up right over here, rejected, and then we had a candle closing bearish here, forming resistance. So what do you expect when price comes back up to this resistance? Okay, once again, you have resistance formed here historically. Okay, when price comes back up to this resistance again, what do you expect? You could expect a rejection. Okay, now if you were to see this rejection on the 1 hour time frame and let's say toggle it down to what, a 5-minute or 15-minute time frame, so let's mark it up as a 5-minute time frame or a looking at 15-minute time frame. So what the picture would look like there is you could expect price to leave sort of rejection wicks in that area. So when you will come on the lower time frame, let's say a 5-minute time frame, let's remove the previous candles right here. What you will see is price coming up, possibly up to this area on the 5 minutes and rejecting here. Okay, leaving rejection wicks. Very likely you will see candles leaving rejection wicks here. Okay, something like this. So this was the first pointer, what you need to remember. Second point, price can also break above or below rejection wicks and continue the same trend. Okay, so what they will look like in terms of structure, ladies and gentlemen, is something like this. Let's remove this line too. Let's say, going back to the same example here, you had resistance, okay? Price came up to it, leaving rejection wicks. Okay, so we will count these as rejection wicks previously. Now, in most cases, let's say if the trend is strong towards the upside, you will see price breaking above these rejection wicks right here. It's going to be a zone. Once we break that rejection wick, what you can expect is that resisting area to turn into a possible supporting area. Once we form support, then you can expect the price to continue the same trend. So this can happen too at times of high volume in the market. Okay, this was the second example which I wanted to mention to you. And last one is Wick rejections previously are not Wick fills, ladies and gentlemen. A lot of people mistake those Wick rejections for Wick fills and end up losing that trade. So once again, going back to the same example we drew over here, let's bring those rejection wicks back. Okay, so these rejection wicks, these cannot be traded as a Wick fill. Okay, if you remember the previous examples that we talked about Wick fills, those are legitimate Wick fills. Okay, if this is a key area where price has rejected multiple times, remember, not one wick, you are seeing multiple rejection wicks. Okay, one candle here, second candle there, third candle there, leaving just massive wicks towards the upside. This is a rejection zone. Okay, these are wick rejections on the left. So if you're expecting price, let's say, close above resistance, something like this, and you expect the next candle to break the high and continue going bullish, it might not happen, man. You might see the next candle breaking the high of the previous, okay, but not going bullish because it has not intercepted or cleared those rejection wicks on the left. Okay, so you gotta make sure if you do trade in this type of situations, you are waiting for that rejection zone to be completely broken, which is right here. So you wait for that area to be intercepted completely, okay, break completely above, okay, stay above it, come back down, create support, and then you can take a buy. Okay, but if price, let's say, comes near that area, closes near that area, closes above resistance near that area, you can wait for the candle not to break the high of the previous, but break that zone completely. And sometimes even if it breaks the zone, it does not continue 90% of the time. So Wick rejections are not Wick fills. Just keep that in mind. And as you practice more, as you trade more in market environments, you will tend to understand these things a little bit more and with more clarity. Okay, so these were pretty much the pointers I wanted to show you. And lastly, let's go back on the previous historical data on gold, ladies and gentlemen, where I could show you Wick rejections here. Now, two examples are taken. Actually, one example is taken from New York session here. Okay, so this is back in November 17th, Thursday at around pre-market New York. Okay, as I have written over there, 7:25 a.m. Eastern Standard Time. Okay, so let's assess the structure here first. Let's zoom out and go back to the example there. There you are. Perfect. Okay, perfect. All right. Removing this, removing this, and removing that. Perfect. So if you look at the structure, overall structure over here, what do you see? Starting from pretty much right in this picture, what do you see? Price trending upright, making higher highs, higher lows. When price made a lower high, you anticipated the previous support to be broken, previous lows to be intercepted. We did that. Okay, trended towards the downside. Okay, now where did price started off is trend bearish? Right after retest right here. Okay, so price came up right here, close to that area, rejected, pretty heavy, closed bearish, turning this into a sort of rejection zone for the future. Okay, so let's go to the following information here. As you can see, this is a rejection zone previously. The entire wick over here is a rejection area. Okay, this is not a wick fail. Okay, now there's two things here. Okay, first thing I want to mention is this resistance. As we can see all across, we can place this resistance right over here. On gold, this was at 1765 historically. We decided to break above but could not sustain a move towards the upside, rejected, closed back inside the range. As you can see, that big bearish big rejection bearish candle right there. Okay, now when we came back into the future over here, to potentially, a lot of people will think of wick fail. It did not happen. Why it did not happen? Because this is a rejection zone. Okay, in order to fill this wick, you cannot fill it first of all because this is a rejection zone. In order to trade a bullish trade right here, you will have to wait for this zone to break completely. Once this zone is broken, then you can expect price to trend up, create new highs. Once the new highs are formed, you expect a bit of a pullback to that same area, and then you can take a trade expecting price to continue its flow towards the upside. Okay, so this was an example of a wick rejection that happened previously. Okay, this was a zone and a resistance previously, which we came near it, rejected, closed bearish, and with the rejection on top of it. Okay, right here. So when price came back to it, tapped into this rejection zone, it's formed a similar reaction of wick fill. Okay, so this is another example of a wick rejection, not a wick fill. Okay, ladies and gentlemen, this video was basically on wick fills and wick rejections. Hopefully this helps you make better trading decisions in the market, if not the best ones. And once again, if you decide to learn a little bit more, leave a comments in the video asking questions. You will definitely get feedback. I will definitely reply back to your comments. Okay, until next time, ladies and gentlemen, do me a favor, trade safe, and always stay disciplined and consistent into your trading. Until next time, peace out.